of a quote-unquote news report, which was then debunked.
Yeah, well, Tamanna, it's going to be that kind of a May, right? And that kind of a May comes every once in 5 years.
Yeah.
And here we are, election season. A lot will be speculated upon, especially given that, well, should the incumbent party be in power, what can we expect going forward in the new term?
I thought elections was a non-event for the market. I mean, that's what everyone's been saying for several months. We're going into phase 3 tomorrow.
Yeah.
And it's largely been factored in, but I suppose some trepidation before that.
And let's not forget, the earnings season is certainly having its own say as far as the markets are concerned. That's the other factor that we also need to consider.
Yeah, absolutely. So a lot to unpack for you this morning. Let's begin with the global cues, because if anything, what's going to I would say contribute to a positive mood today is the global cues we've seen. I'll pull up implied Nifty before we get into the details of how Friday's close was in the US and how global markets have closed. And you're seeing that 108-point possible gap up for a couple of reasons. One, that there was a clarification from the finance minister herself that a speculative news report about huge sweeping tax changes after the elections was completely unfounded. Second, you've had a very, very sort of positive Friday. So a couple of things. Let me start with what's happened. The Dow was up 450 points, and largely because of a positive jobs report. You had a fabulous Friday because the jobs data that came in was, so new jobs created were 175,000 versus an estimate of 240,000. So much significantly less. On the other hand, you also had unemployment data, which came in a tad higher than what was expected. So 3.9% versus 3.8% month on month. Now, why is it good? Why are these both good cues for the market? I mean, because lesser jobs were created and, your unemployment rate went up. That's because it gives the Fed enough to start thinking about rate cuts. It's a great cue for rate cuts. That means the economy is not revving up at top gear as was expected. So that slower jobs growth actually raises hopes of a rate cut, and that is why you've seen U.S. markets and global markets taking that cue from Wall Street looking fairly positive. In fact, if you pull up the bond yields, they slipped quite dramatically before improving and, gaining some ground, but still below 4.5% on the 10-year Treasury. So that sort of is the right kind of setup to go into trade today. Even crude, very benign. You had a steep drop, but then again a recovery. Brent still just a tad over $83 a barrel. I pull up Asia for you, and Japan is shut today, but Asia is largely positive and not too much of a issue over there, too much of concern over there. Chinese PMI data has also come in. So the setup in that sense looks good. Now, I was talking about what really is the other domestic factor that could change. And I'll just pull up for you what the finance minister said. And this is what happened on Friday. You saw a sharp drop on Friday. The Sensex was down about 1,100 points at some point. And one of the reasons being believed is a news report that claimed that after the elections, there will be sweeping changes in tax rules, which will look at all asset classes with the same lens, and that spooked capital markets, of course. Now, that media report saw that big drop. You saw the finance minister then come in, and she went on social media, on X actually, and said these media reports, are completely purely speculative, and she completely debunked them. So that's maybe going to calm nerves as well. So in terms of those two factors, positive jobs data and the finance minister calming nerves is going to be good. I'll just quickly put up what the fund flows were like on Friday to give you a sense, because in that sharp drop, you did have FIIs selling more than about 2,000 crores, but not massively. It seems it was maybe the retail investors who got the most spooked. DIs did buy, but very small volumes as well. And, that brings me to the point that you made, Agam. Everyone's sort of sitting on the fence, at least for a bit.
Yeah. Tamanna, I just want to add on to the point that you're making from the U.S. Federal Reserve's point of view. Last week, we had a roller coaster ride. We started off the week with rate cuts. Then you have the sentiment where there won't be any rate cuts, but there could potentially be rate increases.
When you say we started off the week with rate cuts, you mean speculation of rate cuts?
Yes, speculation of rate cuts, right? And then, of course, we had more and more experts coming in like, hey, maybe we won't get rate cuts, maybe we'll see a hike in rates. And now suddenly we have this data on Friday and we're back to square one. And it's that, I think it's quite ridiculous to a certain extent, because you cannot have so many swings in terms of sentiment and what you can expect just in a span of 1 week. And, to be very honest, I'm sure even Chairman Powell does not know at the moment whether or not he wants to, change rates at the moment.
I think bulls were looking for an opportunity.
Right.
Bulls were looking for perhaps for an opportunity to come back. Now you're talking about rate cuts. Now there are some penciling in to perhaps by end of 2024. So yes, as ridiculous as it sounds, you're right. You've gone from 0 rate cuts in 2024 to definitely 1 in September.
I would say that to a certain extent, this is possibly a reason, at least some participants in the markets will take this as, at least we're not going to see any rate increases, so that talk is out of the way.
But that he clarified in the last policy.
Yes.
He came and said that there is going to be no rate hike.
Right.
Yeah.
Well, of course, it has had a bearing when it comes to our own domestic markets. And what's really interesting is that sharp cut on Friday. Of course, a lot of that was on account of speculation with respect to taxation, and that's the reason why we did see that jump in volatility. In fact, the VIX has gone from the mark of 10 to all the way to as much as 14 and 14.6 to be precise. That's a 46% rise in the India Volatility Index in just 1 week. Of course, something like this is possible even in 1 day. But, the fact that we did see that rise coming, and along with that, a lot of weakness in as far as the Nifty is concerned. In fact, some technical analysts will tell you that there was a formation of this pattern called a bearish engulfing, which means that while the day did see a higher high that compared to the previous trading day, the low was lower than the previous trading day as well, and that could potentially mean further weakness. But whether or not that in fact can happen is something that we're going to wait and watch out for. Of course, we do know that we're looking at potentially positive open at the moment. Very quickly, at the moment, area of resistance 22,800. That's a tough one to take out, because we did see the Nifty test that at least twice in the last 6 to 7 odd sessions, and this is while the Nifty also made a new life high, but it did not move above the mark of 22,800. So that is going to be an important level to watch out for. A lot of calls have been written around 23,000. So I would put it in a range between 22,800 and 23,000. On the lower end, the support at the moment. So 20 to 500 becomes a little bit of a pivot point at the moment, because that's where we are looking at the Nifty consolidate over the last 7 or 8 odd sessions. And on the lower end, we're keeping an eye on 22,000 to 23,000 as a support zone. Nifty put call ratio fairly neutral, but it's gone below the mark of 1, which means that should it move back to the mark of around 1.7, that means that the markets will be very, very oversold. And of course, the long ratio as far as FIIs and index futures are concerned, that has also moved below the mark of 50%. So now at 44% as against 53% in the session earlier. That said, we did see FPIs sell into Indian equities. The question really is, can we expect a bout of short covering? And if we do see a about a short covering, where can we expect the Nifty to go from here on? A lot of these questions potentially will be answered through the course of this coming week. And as I've said earlier, the earnings is the other factor that we're going to continue to keep an eye on, and that could potentially either improve or worsen sentiment for markets going in.
So 22,800 is that key point, and a lot of commentary also coming in, Agam, that I was listening to people, experts talking about how maybe you will see a clear breakout beyond that point post June 4th, all things considered. Even though markets have priced in a policy continuation, etc., etc., But just having those numbers in and the size of that majority, whatever it may be, on the 4th of June when you'll see election results, will become very, very key. Now, we talked about how the weekend was a sort of a turnaround story. Global market mood lifted. You had clarity coming in from the finance minister, and those tax concerns have been pushed back for now. Maybe you'll see something similar for a Kotak Mahindra bank as well. So as we talk about the stocks that should be on your radar, I think the no-brainer and the number one choice would be Kotak Mahindra Bank. Their numbers were stellar, beat on absolutely all counts, PAT, margins, deposit growth, advances, everything better than expected. But what I guess is that it's not just the numbers. The numbers have been good, but it's the commentary from Mr. Vaswani, the Kotak Mahindra Bank chief, which has been very, very positive and clear. He's talked about how they are sort of fixing all the issues that RBI had. Remember that they're under the radar of the regulator right now. They've been stopped from onboarding customers online, and that is, of course, a big hit. But he's talked about how they're working on it full time and are roaring to come back. He's also addressed so very squarely the issue of exits at high levels of, KVS Manian. And at one point, and this is, you should go to the ndtvprofit.com site for all the inside details of those stories. But at one point, Mr. Vaswani also talked about how Mr. Manian has left, but has nothing in hand right now. We're going to get our banking team and our banking editor in just a bit to get more details on what exactly is cooking at Kotak Mahindra Bank. But suffice to say, from a stock perspective, I'm looking at three notes today: Jefferies, Nuvama and Bernstein. Bernstein, in fact, has rated it at a perform with a target price of 16.50, not a massive upside. But they say that solid deposit growth led by term deposits, even though is good. The NIMs have been very heartening, and it's a stellar quarter if only numbers mattered. I really like that line. A stellar quarter if only numbers mattered. And that is so true. We've seen that throughout this result season. It's not always just about the numbers. I could take an example for Tech Mahindra: bad numbers, great commentary, everyone's excited. And so many more coming up like that. So, I suppose Kotak Mahindra Bank also will definitely see some kind of a positive up move, perhaps right at the get-go, because of a good set of numbers. M&M Financial is the other one, and I've picked the first three just basis news that has come in. M&M Financial, again, quarterly numbers out, not looking great on the profit side. Net profit was down 9.5%. Total income, though, has grown 21%. Now, this fraud that they faced in one of their northeastern branches has weighed fairly heavy. So the management has come and clarified that this has weighed on their profits to the tune of 136 crores. They also said that they have not found a similar fraud in any other branches except one. So you might see a bit of a hit on M&M Financial, perhaps initially, but the fact is that they have found the problem. They have closed the gap as of now. They also expect a recovery of certain amount upon completion of actions by law enforcement authorities. Here, I think, Agam, it's a little iffy because these things take time.
Yeah.
So there's no way to really pencil in a recovery of 136 crores at any point.
Yes, absolutely. And let's see how the stock reacts to that one as well. But, among other stocks, there are a handful of...
Just one more. I just want to add the trio of BFSI this morning, and Paytm is what I will add on it. So, again, all of these are because of news flow, because of what management is saying, and Paytm has done this big rejig. So Bhavesh Gupta is out. He's resigned. He'll be relieved from services, close of business hours on May 31st, but will continue as advisor in the CEO office. So that's a key personnel who was moved out. Paytm's services got a new CEO, Varun Sridhar, and will now focus on distribution of mutual funds. Rakesh Singh is now the CEO of Paytm Money. So quite a rejig in top management for 197 Communications, and that could be seen as a bit of a positive this morning.
Right. Well, from the trio of BFSI to the trio of consumption, I have Titan right at the top of my list. Now, the earnings have been fairly in line with expectations, perhaps a notch below. But, well, we're still looking at a very strong revenue growth of around 21%. We've seen a knock of around 100 basis points in its EBITDA margins. And the contraction has been more than what the street was working with, which is why the profit number is also one notch below street expectations. The profit has grown only 5% on a year-on-year basis. Good news, 21% growth in its jewelry segment. It continues to provide that strength, that growth as far as your consolidated numbers go for Titan. But, the other segments, once again, continue to be lackluster. So when it comes to watches as well as eyewear, even though the contribution to the overall revenue pie is not as substantial, it is something that is weighing on your overall, consolidated picture. We move on to Avenue Supermarts. A very strong quarter. It's something which is evident in the price action as well, as far as the stock price is concerned, because we've started to see that move up there. What's heartening, perhaps, as far as investors are concerned, is that, sure, while we are looking at 20% growth in its revenue, there's a 10 basis points improvement in its margins, and that was the big surprise coming in, leading to a 22.4% growth in its profit. What are the big takeaways from this particular quarter? They've added a whopping 24 stores for this particular quarter going in. Their same-store sales growth is also nearly double-digit. Well, still single-digit, but nearly double-digit. And besides that, their product mix has seen an improvement, which is why there's been an improvement in its EBITDA margins as well, contrary to the expectations of the street going in. And the final one, of course, in terms of the consumption stocks, which is on my radar, is Britannia. We were expecting a quiet quarter. That's exactly what we've got, about 1.1% growth in its revenue, 60 basis points decline in its EBITDA margins. But once again, the EBITDA margins decline has not been as sharp as what the street was working with, because of the fact, and as the management puts it in their press release, that they have been carrying out several measures to counter the higher input costs. And to a certain extent, pricing has, of course, played a part in there. And, well, the initial volumes estimates are anywhere between 1 to 5%, though 5% does seem like on the higher end of the spectrum. The management does not actually give out the volumes number on a quarter-to-quarter basis, but these are just your estimates. And again, a subdued quarter, mostly rural segment, continues to weigh on the sentiment, and that's also the reason why we've seen such a slack revenue growth number as well, Tamanna.
That's across the board, though.
Yeah, it is.
We've seen that in all of the major FMCG players,
Yes.
and that pain is expected to continue. I mean, some expectations that post the elections there will be a booster from the new government, which will lift rural consumption, but then, that remains to be seen. And how soon that actually pairs out remains to be seen. So perhaps another couple of tough quarters for this space. It was a tough quarter for Tata Tech as well. So Tata Tech's the other one that I want to talk about. Net profits down 7.6%, revenues down mildly 1%. EBIT was also, not great, slightly uptick by 211 crores versus 209 crores. Margins were flat. So it's a miss on most fronts, but the ER&D book looks promising for FY25. And there's no real problem in their EV mix. We're in fact going to hear from Warren Harris ahead on the show. So stay tuned for that, but expect some weakness in a Tata Tech. The numbers have not been very enthusing for investors, is all I would say. Zen Technologies, on the other hand, has had a runaway quarter and a year. A good set of numbers. Revenue up 47%, EBITDA up 43%, profits up 60%. Margins slightly weak, looking at, what the numbers are. EBITDA margins were 35.6% versus 36.7%, so shrunk ever so slightly, just 110 bips. But anything in this defense space has been doing very well, and Zen Technologies is at the cutting edge of some of those drone sort of technologies that now India is very focused on in a Make in India fashion. So The stock has already run up a fair bit, but the numbers are nothing that will disappoint investors per se. We'll be talking to them ahead today as well, so stay tuned for that conversation. REC is the last one I want to talk about in this leg, and no big shakes in terms of news, but they have got an NOC from RBI to set up a unit in Gift City. I'm talking about REC because look at the kind of run-up they've had, and we just pull up the chart for the last 1 week, post their numbers, blockbuster numbers. That stock has been on a runaway, and more and more reasons for cheer keep popping up. Yeah.
Yeah, well, there you have it. That's mostly a roundup of all the stocks that you can watch out for as we move into trade today. But, the other interesting thing, or rather the other interesting event that has taken stage is back in the US. Well, of course, we're talking about Berkshire Hathaway's annual meeting, Tamanna.
Yeah, and are you feeling the same FOMO I'm feeling? Because I'm very jealous of my colleague, Neeraj Shah, who, just to make up for the fact that he's at this wonderful event, we've roped him in on his break and said, Neeraj Shah, since you've crossed this off your bucket list, you listened in person to the Oracle of Omaha, you have to join us at 8:15 on a Monday morning to tell us all about it. First of all, kudos. And how was the experience? That's just my first question. How was the experience?
Magical, Tamanna. I mean, all of us, you, me, Agam, have kind of seen this on television, but just to be there and see him in person, hear from him in person with 40-odd thousand people around was quite magical. The only remiss that I would have, or anybody who's not been there before last year would have, is that there wasn't a Charlie Munger this time around, and there will not be a Charlie Munger at a Berkshire Hathaway AGM ever again. So that was that small issue, if you will. And in some fashion, if you just see what, the photographs on your screen just show you the participation that came in at the AGM. This was, by the way, me with Guy Spear at 4 a.m. lining up. And by the way, I was late. Had I been at 3 a.m., I would have been the first one into the hall. It was 4 a.m., so therefore I was maybe the number 250th into the hall, and therefore got a seat behind and not quite in the front. But it was magical, to say the least. The energy, the atmosphere, the admirers, and it's not for nothing that it's called the Woodstock of capitalism. It's just such a great value investors summit.
Yeah. So while you have flexed completely, Neeraj, about all the people you've met and all those amazing selfies, tell me about the big headline from the Indian perspective. Of course, not the biggest headline globally, but the fact that he was asked and talked about India. And he said that, yes, we should look at it, but maybe our younger management will. He also talked about, jokingly in the end, that I don't know if I'm going to be here next year. I hope to see you, but I don't know if I'll be here. So the succession plan seems very clear at Berkshire Hathaway, and the focus could now shift to India. Is that a fair assessment?
Partly, yes. And by the way, you guys might have some thoughts as well. So I'd love to hear what you guys thought about it. But two things. One, to this him saying that he may not be there next year. Now, this is something that he's made a habit of saying every time. It just assumes more significance now because Charlie Munger is not there. And suddenly, at the end of the conversation, when he signed off the 6-hour meeting, he signed off by saying that I urge all of you to be here next year, and I hope that I'm here. This time around, a lot of people, including me, felt that, this is important, simply because his best pal is no longer there. And it was I'll just take a quick moment before I give you an answer, Tamanna, to say that it was all about Charlie Munger, this event. I mean, everything that revolved around the AGM had a Charlie Munger imprint to it. And we'll get to that because I'd love to hear what you guys think about it as well. But to your other question about the focus on India, I think it's something that he's been asked intermittently for the last 5 or 6 AGMs. At least 4 of the last 6 AGMs, he's been asked about emerging markets like India. And his response has largely been around this, that there are exciting markets out there. We don't cover them as much. We don't look at all the markets as closely as we do. But yes, some point of time we will. There has been some small, minute, indirect participation that Berkshire Hathaway has done, but nothing quite meaningful. At least I thought from the answer as well that it kind of left that it's a great market, presumably, but there's no clear directive from the Oracle of Omaha that India is on the list, in his parlance at least, in the current context.
Right. Well, of course, on one of the pictures that you did see, and as Neeraj pointed out, was where he was with Guy Spear. Well, for those who don't know, he manages the Aquamarine Fund, a fairly large fund in the US. But Neeraj, I reckon that, a lot of us here would also want to know about other celebrity sightings, potential conversations with them. What can you tell us about that?
Yeah, so I mean, a lot of warfare conversations. There was Ramdev Agarwal, there was Dharmesh Mehta from India. I mean, the more notable faces, if you will. Monish Pabrai was there, Guy Spear was there, a lot. Lee Lu was there, which is quite amazing, really. And he was the center of attraction, really, for a lot of people. But I happened to attend an event the day before, hosted by Guy Spear, and which was around what is it that learnings from Charlie Munger and Warren Buffett. Charlie, in some sense, guys, lives on, right? If you see any of the answers given by Buffett as well, there's this very strong poignant moment wherein when he was giving a reply, an answer to somebody, and he turned to his left to Greg Abel and said that, Charlie, you want to give it a shot, or something like that. Charlie, your turn. Almost forgetting that there's no Charlie Munger next to him. So throughout that meeting, it was an imprint of Charlie Munger out there. And every conversation that we had with people seemed to suggest this, that, how would Warren take it? And therefore, my last point on this particular point, Agam, and again, to every answer that I give, I would love to understand what you and Tamanna think of it. But somebody asked him pointedly that who does he look for advice now that Charlie Munger is not there? And, Warren Buffett, I mean, it's Warren Buffett, really. They don't come any better than that. He mentioned that if I didn't think I could have done it myself, that quote is on your screen. He says that if I didn't think I could have done it myself, I wouldn't have gone thus far. So to some extent, I talked to myself on investments. It was a fitting response from the world's greatest investor.
Yeah,
I don't know how you guys thought about it.
So absolutely. So a lot of emotional, stuff there. What I found very, very interesting, Neeraj, for me, when I was seeing all of those highlights and the big takeaway, is the way Warren Buffett looks at AI as a possibility so differently. And that tells you why Warren Buffett is a Warren Buffett. While everyone's figuring out whether you could use AI to sell people more things or get their data or blah, 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 he's talking about the potential in AI scamming. He's actually saying if that's something you want to get into, AI scamming is going to be the next level thing. He saw his own video and he got spooked. Yeah. Because you can't tell what's real and what's not.
Tamanna, it's interesting because he kind of sounded off these warning bells of sorts for cyber security and cyber attacks for like 3-4 years in the last 5 as well. And we know how cyber security has grown to be a big business because of this very reason. So it's interesting. And he mentioned that he mentioned that I don't know too much about AI, but still I'll give you my opinion that as much as there are pluses, but there are minuses as well. He heard his own voice and face giving out a response, and that is what got him a bit perturbed, if you will. So twice or thrice in the meeting there were questions asked about AI. You would expect that, and quite interesting Buffett's response. Interestingly, though, guys, not a single question, at least none to my memory, on cryptocurrency. It was the hottest thing past 5 years ago. Not a single question out there.
So crypto's out, AI is in. This is the place. You were at the place to I think the mecca of global investment, to get a sense of what the next big thing is. And you just mentioned very briefly in passing, Neeraj, but I wanted to know more about that there were a lot of conversations about war and the outcome of wars and conflicts around the world. So sort of any insights on that? Because this is unfortunately going to continue to be a big industry and revenue generator.
Yeah, no, again, from the answers that Warren Buffett gave and from everybody else around us, by the way, Tamanna, it was something that I, from a perspective of a journalist who's very inclined to know how do people who are looking at investing, thinking about the 2 or 3, potentially 4 geopolitical conflicts, almost everybody seemed to believe that they are taking it in their stride, so they are not really thinking too much about geopolitics at the current point of time. If anything, people are thinking about the elections. People are obviously talking about the US elections a lot more, naturally so. but not as much about the geopolitical conflict, to be very honest. Didn't hear too many people taking it as a big consideration while taking their investment decision. And there are a bunch of value investors out there, as you would imagine.
So all Trumpers there, they're expecting a Trump return since they're talking about elections?
Okay, let me qualify this. Every Uber driver that we spoke to, we asked them this question. And the response, without getting into the I or the nay, I'm just saying the response seems to be what the polls currently in the US seems to suggest.
Which is, come on, don't leave us hanging.
So, a lot of Trump support, I must say, but who knows? I mean, we find it difficult. Tamanna, you track politics so closely, right? We find it difficult to, or you would probably find it difficult to predict an Indian election.
No, absolutely.
Something which is so closely fought as the US election.
Absolutely, no, not asking you to, the stakes are low, right? I mean, you can get away with talking to Uber drivers and getting a sense, at least for you. You still have to come back and vote here. But
most certainly.
We'll see you back soon. We'll see you back soon, Neeraj, and great chatting.
Looking forward. Raring to come back, Tamanna, to be very honest. But I just, just one last thing, and it kind of stood out for me as the most important moment. And again, I think maybe Agam's moment might be different from the AGM. Tamanna, your moment might be different. Would love to know what you guys thought. But I thought one of the most important moments from the AGM this time around, the young chap lives in New Zealand asking Warren Buffett that what would you do if you had one more day to live with Charlie Munger? To which, of course, he gave a fairly long answer as well. But I think how he ended, wherein he says that, and this, therefore, in Warren Buffett's words, not quoting him verbatim, but is something to this effect, wherein he goes out and says that you should now start thinking that what would happen and ask yourself, who would you want to spend the last day of your life with? And then figure out how you could meet them tomorrow and then meet them as often as you can. I mean, just every AGM has one or two very important life lessons. They may be very obvious, but when Warren Buffett or Munger used to say them, they used to stand out, mostly Buffett. And this time around was no exception. To my mind, in over 5 hours of that AGM that lasted, at least this was probably the most moving moment for me. In addition to Warren turning to his left and asking and addressing Greg Abel as Charlie Munger, thinking that Charlie Munger was dead. That was probably the most moving thing. This was probably the most pointed life lesson of sorts.
Yeah, superb. The fact that so many people line up to hear a 93-year-old and his words of wisdom and who can still see the future is fantastic. So, great to hear about your experience, Neeraj, and we'll see you back soon right over here. So enjoy the rest of your holiday.
Well, hardly holiday, traveling back, but see you guys on air on Wednesday morning. Yes.
All right. So Neeraj Shah there, our very own Neeraj Shah at the Berkshire Hathaway conference, talking about what those key takeaways are. And we'll take a very short break though at this point. And on the other side, Agam comes back with the F&O setup.
Welcome. This is India Market Open. We are taking a look at how the futures and options space has panned out last Friday and what we can expect going into trade today and this week. So last Friday was a day of weakness coming in for the benchmarks, with the Nifty coming off by around 0.8%. A lot of long unwinding coming through, and because of that, we've seen an open interest decline of around 5.5% as far as the May futures go. The picture as far as the Bank Nifty is concerned, not very different. A decline of 0.6% for the benchmark. It's lost out on the 49,000 mark and unwinding to the tune of nearly 9% in open interest, coming down to its May futures. What about the options market? Now, naturally, given the fact that the Nifty came off to quite an extent and moved and closed below the mark of 22,500, we saw a lot of unwinding around the 22,500 strike put. And of course, a lot more writing in terms of that respective call as well. But where does that leave us when it comes to your overall open interest distribution? Well, for now, max OI now stands at around 22,800. It has shifted from 23,000 now to 22,800 in terms of calls. And as far as puts are concerned, all the way down to 22,000 put, that's where we're seeing traction. I reckon that now a little bit of more volatility is being priced into the markets, which is why we're seeing a good over 450 odd point difference in terms of put. And that's something that you will have to be wary of, considering the kind of expectation with respect to the markets going in. But let's move on and talk about. Now, stocks have panned out, and we did see a lot of shorts in Coforge, reacting to earnings largely. MRF as well under pressure, but longs for Navin Fluorine, Shree Cement and Bajaj Finance. And among stocks which saw unwinding in trade, we saw long unwinding in Abbott, Havells India, Nimca Laboratories, Dabur and Oracle Financial Services, looking at about a short covering. The question really is that where do we go from here? What do we do with the current market variables and where they stand? Well, let's get in an expert. We have Shilpa Rauta Prabhudas Leeladhar, who's joining us on the show. Shilpa, good morning. Thank you so much for joining in. Let's start with your assessment on the benchmarks. What do you make of the Nifty and the Bank Nifty? How do you deploy option structures here?
Good morning, everyone, and thank you for having me on the show. Talking about the indices, yes, we had seen some, major profit booking on Friday, but which was on expected lines as well. The rally has been stupendous, so some sort of profit booking before the weekend, I guess, is quite justified. So as of now, we see the long-short ratio for the FIs net long stands at 44% as of now, which means that, some sort of consolidation can happen. Probably a dip for the net longs towards 33% can also happen, but that will only be some sort of buying opportunity where, again, a short curving rally can be seen. So in that context, we might see Nifty, making a dip further towards 22,250 zones, but then that should be, like I said, a buying opportunity for targets of 22,800 on the upside for a little positional play. Above that, we are definitely going to see 23,000 to 23,300 zones. Talking about Bank Nifty also saw some sort of major profit booking, but as long as we are holding 48,500, I believe that there is no reason to panic as of now. We will see that upside move towards 50,000, but Bank Nifty, as we all know it takes a lot of consolidation time, and that is also a good thing. So nothing to worry about as long as we are holding this 48,500.
Stocks then, Shilpa. Right at the top, I believe you have a call on NMDC.
Yes, the metal space in this chaos is looking quite attractive, and we saw NMDC, in spite of that choppy market on Friday, was making really some sort of good upside move. So the stock futures trading at around 269, 270 now. I believe it is well placed for a target of 300 positional also. So if any dip also, if you get towards 260 zones to 255, I guess that is also a good buying range. You keep a stop loss at 245 and look for targets of 300. The other one, again, I have from the metal space. It is SAIL. SAIL is also very well placed. In stock is at around 168, 60 in futures. So I believe, just stop loss around 160. You can keep it and look for targets of 180 and more from here.
All right. Well, Shilpa, thank you so much for joining us and taking us through your views on the markets and giving us a handful of trading ideas. Well, with that, it's over to you, Tamanna.
And the focus this morning, like we said, on Kotak Mahindra Bank. So fascinating story. And just a few more insights on their numbers, etc., from Vishwanath Nair, who joins us now. in the studios. Vishy, good morning. So now, I was looking at the clutch of notes on Kotak Mahindra Bank, and one line that stood out was stellar results, but if only results would be enough. So we spoke a bit about the numbers, and we'll have our analyst on as well. The numbers have been good, but what about the rest? Now, the concerns with that bank range from regulatory action to what's happening in the top management, etc. What was the sense that you got listening to Mr. Ashok Vaswani?
Right. Good morning, Tamanna. So, this press conference that happened on Saturday was originally supposed to be a Zoom call. But then they suddenly midway changed it to a live press conference. The first one that Ashok Vaswani has had since he took over on the 1st of January. What a time to come in front of reporters. But essentially what he was pointing at is that they're taking the RBI's embargo on credit cards as well as new customers very, very seriously. And that their first and top priority is to come back to business as usual. Because once you reach that level is when you start showing some amount of growth. That's what the new CEO would like to sort of flex in front of the shareholders as well as people who are watching the bank quite closely. He's spoken about the fact that Kotak Mahindra Bank has had a long period over the last 2 odd years in terms of upgrading their technology as well as the tech infra that they have at the bank. They were in the process of completing that, but before that, the RBI came in with these restrictions. So it is likely that it won't take as long as it took some of the other players to fix things and bring things back to order. Remember that this whole thing...
It's likely it won't take as long as whose assessment? Mr. Vaswani himself?
Mr. Vaswani himself. He believes that it should take about 2 or 3 months before they can go back to the RBI and say, listen, we have fixed whatever you asked us to fix, so why don't you take a review? They still need to appoint an external auditor, who will come and review everything and submit their report, and on the basis of that report, the RBI would decide whether those restrictions need to be removed or not. This whole process is interesting because Kotak Mahindra Bank has been spending on IT to the tune of about 10% of the OPEX, which is higher than what a lot of other banks in the ecosystem are currently doing. This year, this quarter, for example, as of FY24, the total expenses were about 17,000 odd crore. 10% of that 1,700 crore roughly they've already spent, and they are likely to keep pushing at that and maybe reprioritize more expenses towards improving the technology infrastructure. So it's likely that the 10% may go up a little bit in FY25 because that is the year that they need to really turn it around. But the RBI in its the statement that it put out was very, very harsh on Kotak Mahindra Bank, said that we have repeatedly been asking them to fix these issues, but they have not adhered to whatever the RBI has asked them to do. The bank says, well, Mr. Vaswani goes out and says that maybe our efforts fell short, but we will try our level best to ensure that the regulator is satisfied at the end of it all.
And, let's just listen in to a comment from Mr. Vaswani from that press conference as well.
The management team and I are exceedingly clear that our first priority, our first and top priority is to get Kotak back to business as usual. And while we are doing this and in this period, while we are building everything that it takes to get Kotak back to business as usual, getting ready to come back roaring when we get the permission to do so from our regulators.
Now, so that's on the RBI regulatory action bit of it, but that's not all that has been haunting Kotak Mahindra Bank for the last couple of weeks, I would say, Vishy. The other one is the exit of Mr. Manian. Yeah. Now, on news of that exit, a Federal Bank went up. Now, it's not clear if Federal Bank is hiring him or who is hiring him and what happened there. You've got a lot of inside details on the story as well. Do share.
Yeah, so interestingly, Mr. Vaswani did not have to go there, but he did. And he said that, listen, as far as I'm concerned, or as far as I know, Mr. Manian does not have an offer in hand. Now, that was a completely unnecessary sort of segue from the press conference, but he did make that comment. And it's interesting because 6 days since the RBI announced the embargo, the second in command of the bank turns in his resignation. This resignation is discussed in a 30-minute board meeting, and then with immediate effect, he's asked to leave the bank. So that was something that was interesting, and that's something that we asked Mr. Vaswani, and his point was that...
So he was asked to leave with immediate effect?
Yeah, I mean, in the sense, the letter signed by Mr. Vaswani, which went up on the exchanges, says that accepted with immediate effect. That was something that it was part of a signature. And when we asked him why that happened, his point was that Manian had aspirations and he wanted to go into the financial services space. That made things a little bit uncomfortable because the bank is going through a period of transformation, so you don't want somebody who's leaving the bank at that crucial juncture. And maybe that's why Mr. Manian was relieved with immediate effect. But it's interesting because the second-in-command of a bank leaving after a 30-minute board meeting is pretty much unheard of at this point in time. So that was the interesting bit in that. Now, whether he goes to Federal Bank or not, Mr. Manian, is something that will be decided by the end of this month, because that's when Federal Bank is going to send the list to the RBI, and the RBI has to approve whether it's an external candidate, supposedly Mr. Manian, or internal candidates, which is Harsh Duggar as well as Shalini Warrior, who are EDs at Federal Bank, whether they succeed Shyam Srinivasan. That's something that we need to watch out for, but that will be clearer in the last week of May.
Just want to point out one thing out here. Kotak Mahindra Bank currently is at 1,550 rupees per share. The first time it hit 1,550 rupees per share was back in September of 2019. It's been 5 years, and it has given you 0% returns. In comparison, the Bank Nifty, back then, from then until now, it has moved up by as much as 168%. And Kotak Mahindra Bank is, not in the picture. So it's not only, not moved, it has to a certain extent destroyed well, because you would have lost out on the opportunity to perhaps invest in certain other banks. I know that I keep harping on this, and I've pointed this out many times before, but now in the last 2 or 3 odd months is when we're starting to see what could have potentially gone wrong. Until now we were only talking about leadership or the lack of succession or lack of clarity on what's going to go on once we have new garden order. But there are a lot of other factors which are now coming into the fore, which could potentially have weighed down on how valuations are panning out now.
We need to watch out for that for sure, because as far as results are concerned, they're fairly sorted.
Yeah.
Leadership issues as well as RBI's embargo, those are problems in the near term at least.
Yeah.
But long term, I don't know about the valuations, what that is going to look like.
That's a great point to bring in Ashutosh Mishra, Head of Research Institutional Equity at Ashika Stock Broking. Ashutosh, good morning, and glad to have you join our discussion here on Kotak Mahindra Bank. So now we've talked about all things non-result as well, which have impacted sentiment on the stock. Let me start with your take on the numbers. By all accounts and looks of it, a stellar set of numbers. Does that give you heart that some of the losses that we've seen will be retraced in the bank's stock price?
Thank you for calling me. First, if you look at the numbers, it's clearly indicating that Kotak is in right territory. If you look at the commentary also post the number, it's clearly indicating that they are ticking all the right boxes at this point of time. Yes, there was a setback related to the RBI restrictions on acquiring new business through the pure digital mode and credit card part of it. But in my view, if we take the examples, recent examples, and the type of guidance which management has given at this point of time, probably this can be sorted out much earlier than what we as a market, as a whole group, is expecting at this point of time. So if that happens, some of these valuation concerns which we are discussing, will get addressed. And about this whole valuation part of it, yes, across the large private sector banks, especially HDFC and Kotak, if I will highlight these two, has seen a major de-rating over the last 3.5 years. Various reasons we can attribute about it. But going forward, when we look, probably these are the banks which are now rightly positioned to take advantage. Some more time they will be hovering around the current level. But if you look from the 3 years perspective out from here, the type of India growth story which we are planning out, they are really well positioned to take advantage of the whole thing.
Right. Ashutosh, come in on valuations now, because at the moment it does seem like very, very compelling valuations. Even before the RBI embargo, the valuations seemed fairly cheap with respect to several of its peers. Now, in terms of growth, again, a lot are suggesting that there really isn't as much of a problem here. But, notwithstanding the embargoes on its credit card and online business, what's the way forward here? What are you seeing?
So when we look at a growth part of Kotak has really start putting growth in a higher trajectory in the last 1 year or 1.5 years, if I say it. And especially in some of the portfolio, which is high yielding portfolio, the impact of the same, which was witnessed in the net interest margin performance in this quarter also. So in my view, some of the business which Kotak was not there really part of it, and now they have entered into it. And also at the same time, management intend to accelerate the growth compared to what they used to do earlier. And overall opportunity available in the market, I clearly see that Kotak will now, going forward from here, able to acquire or increase their market share, overall market share over the next 3 to 5 years.
Right.
That will reflect in the profitability of too.
Right. Ashutosh, in comparison at the moment now, with the kind of performance that ICICI Bank and something like an Axis Bank have come up with, if you were to stack up these three large private sector banks, of course, let's bring in HDFC Bank as well into the fore. Where do we go from here?
So each one have its own play. Like ICICI is a picture perfect at this point of time. They are from the IT to the growth, everything they are delivering at a best thing. And which also the chair which HDFC used to hold for a decade before ICICI took over that part of it. But if you look going forward, the size of the bank, the opportunity which is, I clearly see the Axis and Kotak to be the better position, given they are relatively smaller in the size compared to HDFC and ICICI, and the opportunity available. So from shareholders' perspective, probably more larger money can be made in the Axis and Kotak Mahindra Bank from here onward.
Ashutosh, just on how you see Kotak Mahindra Bank this morning, what would you do with the stock this morning? JP Morgan has given it a, overweight. Nuvama is giving it a reduce because they're looking at many one-offs in the numbers. That's not exciting them too much. As an immediate response, post the press conference and the numbers, do you expect a sort of a gap up this morning, at least for Kotak Mahindra Bank? Would you use that opportunity to exit, or do you think it's worth accumulating more at this point?
In my view, it is worth accumulating at this point of time. The real uptick in the stock will only take place post the RBI, going ahead and clearing it or removing the restrictions which they have put forward. We have seen in the case of Bajaj Finance the way market reacted on these things. What we are hoping is that from the commentary of the management, that probably this event can come much earlier than what earlier we were anticipating about the same thing.
Yeah, stay on with us, Ashutosh. I also want to, talk about another BFSI story, which is M&M Finance, and we'll just go to Pragati and then I'll get Ashutosh's response on it. So M&M Finance also announced its fourth quarter earnings over the weekend. Tepid growth in net profit, but a lot of that was because of the fraud impact. Pragati, is it now becoming clear that this was maybe just in one branch? How deep set is the issue? What is the management saying after their numbers?
Morning, Tamanna. Management, we haven't had a chance to interact with the management yet because they haven't addressed it officially, but they merely informed it via an exchange filing that a fraud did take place in just one of the branches, and that the impact of that fraud has been about 135 odd crore rupees. While the net profit is down 9.5% on a year-on-year basis, the impact of the fraud is limited to 135 crore rupees, and that's why they have also made a one-time provision against that of 136 crore rupees. Now, the management also clarified that they carried out extensive search and other tests at other branches, and they figured that no such frauds have happened at other places. To be specific, the fraud was related to the retail vehicle loans portfolio, which happened in Aiswal or the Mizoram branch. A complaint was filed in the Mizoram Police, and NDTV Profit previously reported on that as well. As of now, the case is still under investigation. The company has clarified that it expects the recovery of certain amounts after the investigation gets done. But as of now, yes, there is some impact on the numbers of fourth quarter and the overall FY24 numbers. One interesting bit here is that during the course of the investigation, the company found that about 2,887 loan accounts were compromised and that they were fraudulent in nature. And they realized that the net recoverable balance of 136 crore was found in these accounts.
All right, thank you for that, Pragati. Ashutosh, quick take on M&M Financial. Is the worst behind them in terms of now we know the exact impact of this fraud? It's been caught, it's been addressed.
So yes, it's looked like that, but we need to hear from new management team that we earlier what we used to see the lot of issues, especially systems or process issues in the M&M Finance. They are trying to rectify it from the last few quarters, and we hope that the new management team, which is taking over, will probably deliver much better performance. The opportunity is quite huge for the company at this point of time, and given the scope.
Lost the line there with Ashutosh. Can you? Yeah. You're back.
Yeah, if they address the main key issue, then things will be right for them. But yes, we need to wait a little bit more to see that everything is in the right direction.
Okay. Thank you so much, Ashutosh. Always a pleasure to speak with you. So that's the story on M&M Financial and Kotak Mahindra Bank. Let me welcome Sudeep Shah to the show this morning, Deputy VP, Head Tech and Derivative Research at SBI Cap Securities. Sudeep, great to see you on this Monday morning. You're penciling in a gap up, and what would be your strategy today on a Nifty and a Bank Nifty? Let's begin with that.
Yeah, good morning. What I feel is that last week we had seen on Friday almost a 450 point fall from the highest level. But despite that, markets are trading in that upward rising channel, and I feel markets could continue consolidating in this range. And on the downside, 22,280, 22,350 positionally would act as an important support. But post this gap up today, closer to 22,600, any dip towards 22,500, 22,480 thereabouts on an intraday perspective should be used to go long. Because if we see the overall option chain, 22,500, 22,300 put writers are still strong. And even on a monthly option chain, monthly expiry option chain, 22,500 put writers are still holding foot. So I feel on the downside, it is a buy on dips market. 22,500, 22,480 from an intraday perspective would be a good support. And on the upside, I see levels of 22,650, 22,710 to be reclaimed again. And overall, it would be in a range. Bank Nifty would be more, I guess, in flavor, and that has outperformed in the last week also. So overall in Bank Nifty, 48,600, 48,700 would act as a strong support from an intraday perspective. Any dip towards that zone should be used to go long. And overall on the upside, 49,400, 49,500 are the levels that I am eyeing it.
All right, we'll take a very, very short break. Sudeep, stay on with us, but we're right back with pre-open rates and a lot more. Stay tuned.
Welcome back. This is India Market Open. Sudeep, coming down to you, your picks for today. What's looking good to you?
Agam, I feel there are two stocks which have been outperforming in the last week, and they could continue outperforming in this week also. The first one is Coal India. Now, Coal India posted its results on Thursday. On Friday, it showed a big traction on the upside. A consolidation breakout was observed, backed by strong volumes and a rise in open interest. And the stock has closed at its highest level post 21st Feb 2024. So I guess it's a decent breakout post consolidation in the last 2.5 months. And from here, I feel Coal India could rise to 510, 520 on the upside positionally, and one can buy it keeping a stop loss at 458 on the downside. The second pick which I feel could do well is M&M. Now, M&M has been a strong mover on the daily, weekly charts, and within the entire auto space also, this stock has outperformed in the last week. So I feel from the current levels, M&M could also be bought with a stop loss of 2150 on the downside and a target of 2280 and 2320 on the upside.
Sudeep, what about Kotak Mahindra Bank? Kotak Mahindra Bank, M&M Financial. Would like your take on both of those?
Yeah, see, Kotak, if you see, Kotak has breached its important support level now post March 2021. So that dip below 1630 has confirmed the same, and I feel even any rise to say a level of 1590, 1600 would also be met with selling pressure. So unless and until positionally Kotak closes above 1610, 1620 on the upside, I don't see a big bang recovery back on the stock, and everything would depend on how the announcements are shaped up in Kotak Bank. What do we come to know about all these recent bans that have been put on the bank? So I feel overall 1610, 1620 would act as a strong resistance on the upside, and the supports now are closer to 1460, 1450 on the downside. Regarding M&M Finance, if you see, even M&M Finance was under selling pressure in the last several sessions. Stock is now facing strong resistance around 278, 280 levels on the upside, and until and unless that zone crosses, I feel support zones of 250, 253 could get retested.
All right. A bunch of counters I want to talk about is, the first one is REC. Let's pull that one up. That's rural electrification of India. Of course, along with that, its parent PFC has also moved up. But REC specifically has taken everyone by surprise. And this is, of course, following earnings, a stellar set of earnings coming in. It's been one of those big movers as far as FY24 goes. Now, it does seem like it's been a continuation. There has been a continuation of that trend in moving into the new financial year as well. The question really is that at this point in time, what would you do, and would you in fact go ahead and initiate fresh longs, or is the risk reward ratio not that favorable? Sudeep, your view on REC at the moment?
Agam, see, we've seen a big breakout on this stock backed by strong volumes, and the last 2-3 days there has been a strong open interest addition on the long side also. So I feel overall the stock is in a big uptrend, and any dip towards 535, 540 zone should be bought, because the stock has now managed to close and sustain above its February swing high of 524. So I feel now the stock is on an uptrend and may touch levels of 600, 625 also in the coming few months. So any dip towards 535, 540 should be used to go along with the 525 stop loss on the downside, which is the previous swing high. And till this is guarded, till 525 holds, overall upside up to 600, 625 would be on the cards.
Just another one that I wanted your take on was Avenue. Sudeep, numbers were okay. Nuvama has a hold on it with an upside of say 4%, because at the end of the day it's a miss in EBITDA and PAT as well. But on the charts, do you like Avenue?
Yeah, see, if you it's not a regular trading stock, but if you see the weekly and the monthly charts, the stock has given a symmetrical triangle breakout also and has been sustaining above those levels now. So I feel overall on the downside, 4350, 4300 would act as a strong support, and I feel the stock is headed up to 5000, 5100 levels in the coming few months. So, being a portfolio stock, I feel buying on dips in a staggered manner would help riding this up move in this counter.
Let's talk about other stocks beyond just the ones that we've spoken about in terms of earnings. Let's get in my colleague Anushi to tell us about stocks to watch and what's on her radar. Good morning, Anushi.
Hey, morning Agam. So I'll start off my list with DCM Shriram over here. Now this is in focus after the company has commissioned its caustic soda expansion project with a capacity of up to 850 tons per day in Bharuch, Gujarat. Now with this, the total installed capacity there increases to about 2,200 tons per day. Now with this, the Bharuch complex becomes the single largest caustic soda complex in the country. And if you look at the overall capacity of its caustic soda, that stands at about 1 million metric tons. Now moving on to Tata Power. This is in focus after its renewable energy. Tata Power Renewable Energy has made a pact with SJVN to supply of about 460 megawatt of over here and generate about 3,000 million units of power. With this, again, the total renewable capacity of this stands at about 9,200 megawatts. And this agreement is for a period of 25 years with a fixed purchase cost of the fixed tariff of about 4.38 per kilowatt hour. Then moving on to Sun Pharma, this is in focus after it has acquired the Luxembourg-based Valstar for $31 million of cash consideration. Again, with this acquisition, it will also acquire its subsidiary, which is Chemifarm, which specializes in manufacturing and distribution of pharmaceutical products in the Moroccan region. If you look at its standalone revenue, that stood at about 7 crores as of FY23. Last on the list is Craftsman Automation, wherein it has acquired the residual 24% stake in its DR Axion India for a consideration of about 250 crores. Now, DR Axion is responsible for manufacturing aluminium cylinder heads and cylindrical blocks. Now, earlier it had acquired about 76% stake in Feb of 2023. And so now with this acquisition, it is expected to be completed by 30th June 2024.
So for that, thank you for that, Anushi. All right, a quick look at what's moving in the pre-open session. Good momentum, at least on the Nifty, pared down some of those initial gains. But Kotak Mahindra Bank is one that's caught my eye. So pull up Kotak Mahindra Bank, 3.5% up already in the pre-open session. On the losing side, Paytm, Tata Tech, some of the stocks that we talked about, Aurobindo Pharma, because of a spot of negative news, is having maybe a down day in the morning. But Paytm down 5%. All of those changes in management doesn't seem to have helped Tata Tech on the back of its poor numbers. IDBI Bank and M&M Financial also doing fairly well in this session. So is Godrej Property. So the numbers did leave a bit to be desired, but it's doing fairly okay. But Kotak Mahindra Bank seeming like the big winner this morning. Sudeep with us, and so is Devin Choksi. Devin, thanks for joining us, and great as always to have you on the show. I have to begin by asking you about Kotak Mahindra Bank because that's the story this morning. And I'll extend that to the BFSI space because Bajaj Finance is looking like it may be having another good morning as well.
Yeah, Tamanna, good morning. Well, I think the most importantly, the company's result in this particular quarter has been a spectacular one. I think you have seen a sharp jump in the profits, the numbers, I think, coming in from the point of view of the NII as well. I guess I think the business scenario remains upbeat for Kotak. Maybe its strategy has played out, that they calibrated their growth and I think focused on some of the main large accounts where they probably, I think, ensured that they have relatively high amount of safety at the same time, continued growth on a sustainable basis. So those relationships which they cultivated in past years, I think they are bearing fruits now in the current year and hereafter, it looks like. Given the fact that the valuation-wise, the bank has now corrected significantly. Never before we have seen Kotak Bank quoting at a price to adjusted book value of less than 3 times, which is what currently this particular stock is offering in the marketplace. Given the fact that I think they are strategically, I think, better placed in the business environment with a higher number of CASA ratios, I believe that I think this bank probably looks interesting from the investment point of view. Maybe the impact of not allowing the online accounts, I think till the time they correct their technology piece, may probably have some small impact. But as I see it, I think since it is around 7-8% of the portfolio of the business, not major amount I think can be taken away out of the profits I think that the bank has produced in the quarter and the full year. So we remain relatively more positive and think that I think like Bajaj Finance, this one is a buy opportunity because it has corrected sharply on the price.
Kotak is a buy opportunity, says Deven Choksi. That's what a few notes are also saying this morning. Harsh joining us as always with the top brokerage notes. Yes, Harsh.
Well, I'll pick out JP Morgan because that's really stood out for me in terms of their commentary on Kotak. They've maintained, or rather they've upgraded Kotak to an overweight, and they've maintained their target price at 2,070 rupees per share, which is a 34% upside from here. What they're suggesting is the impact of the RBI action, especially on FY25 and 26 financials, seems to be minimal according to JP Morgan. They've suggested the impact to be 2% of their FY26 profit before tax estimates. In fact, not 2%, they are suggesting less than 2% of their FY26 PBT estimates. They're expecting an earnings CAGR of 16 to 17% on this one through FY25 and 26, and they're believing that the 10 times price to earnings which Kotak consolidated is trading at is looking very, very good at this point. And therefore, they believe valuations are compelling. And 34% upside is what they give. The other one is Kotak Securities on a couple of tire stocks, both CEAT and MRF. Now, they've retained their sell on MRF. Downside is 32% from here as per Kotak Securities. They believe that EBITDA has come in lower, 14% below estimates. Stock trading at 30 times FY25 expected EPS, which is expensive according to them. They've cut their 25 and 26 EPS estimates by 6 to 10%, and the lower EBITDA margin assumptions and higher depreciation expense is what they are suggesting will impact EPS numbers. Aggressive pricing, RM uptake would also affect margins is what they continue to suggest. Very similar commentary on CEAT. They believe that EBITDA was in line with gross margins higher, but RM basket will inch up and that will impact margins. So both of those tire stocks in focus. MRF down nearly 4.5% on Friday. Of course, wait for a reaction today.
All right, so let's also pull up Titan at the moment. It does seem like it's going to start on a weak note, and perhaps for good reasons, because we're getting updates with respect to the takeaways from his conference call and some weak commentary coming in. Now, we do know about your very strong numbers as far as the jewelry segment is concerned. But going forward, there is just some amount of concern with respect to gross margins. Gross margins this time around have been a tad lower, specifically with respect to studded jewelry. And again, there's been competitive intensity, which continues to be high. We have more and more players in the organized sector who are, in fact, not only setting up shop, but expanding very aggressively, and that is something that Titan will have to grapple with. Of course, Titan is number one by a large margin at the moment, but it's something that it is going to have to grapple with, because the conversion of the unorganized sector through the organized sector, that's while there is plenty of scope going in, it's also not without its set of challenges. Of course, among the other things that stand out in this commentary is that consumer offers and promotions were given to drive growth, which is the reason why, once again, we're seeing that little bit of an impact as far as margins are concerned. Now, those are the top takeaways as far as Titan is concerned. It does seem like it's going to open with a decline of around 1.6%, 1.7%. Deven, your view on Titan at the moment, how are you standing on this one?
So, my take is that I think the company remains reasonably strong on all its business verticals. Be it jewelry verticals, be it eye care verticals, be it watch verticals. I think each of the verticals are reasonably steady. And maybe I think on a quarter-on-quarter basis, I think you might see some kind of a weakness in some of the verticals, but that's quite, I think, the seasonal in nature. So I don't think that I think it gives any kind of a negative marks to the company per se on its business model. On the contrary, I think the way in which the company is positioning itself with all the personal accessory products, I believe that I think this is one area where probably this company is likely to score bigger going forward. However, when we say bigger, I think in an organized sector, I think they are systematically acquiring the market share. They're systematically putting across newer stores, and systematically increasing the sales per share. So to a greater extent, I think that gives you the confidence. Maybe I'm not, I think, very happy with the quarterly numbers analysis on such kind of businesses, where I think in a given quarter, due to festive impact, I think jewelry may do well. And in a given quarter, due to the traveling impact, some other division may not do well. I don't think that I think it justifies the quarterly way of working as far as this company is concerned. But definitely look at the business from the long-term perspective.
Okay, well, stay with us. Sudeep, finally, a couple of, stocks at the moment in terms of picks, the latest that you have for us this morning.
Agam, I feel one stock that could do well today and in the coming few sessions is CAMS. So this stock in the last 3 weeks has shown a higher top, higher bottom formation, but especially in the last 6-7 sessions, it was consolidating between 3200 and 3300, and today we are seeing a sustained, at least till pre-opening, it is above 3300, and in the last 2-3 days, there has been a strong traction on the upside. So I feel CAMS can be bought with a 3260 stop loss on the downside and a 3430, 3480 target on the upside.
Okay, so CAMS is one of the picks for Sudeep. Angel One, by the way, came out with its business updates for the month, which weren't too enthusiastic. There's a drop in key metrics month on month, so that's one to watch out for. But nevertheless, we're just about 14 seconds away from the opening bell, and it looks like it's going to be a positive morning. One thing that I would note is that a lot of the bump up of the Nifty evaporated by the end of the opening session, so you did have a bit of pressure coming in there, but then there you have it, the first ticks coming in, and yes, there is strength, but the implied open was looking at maybe a stronger sort of an opening, a stronger sort of a gap up after the beating that the markets took on Friday for various reasons. And considering that global cues had set up for a positive start, you're seeing still a bit of pressure, I would say, coming in. Nothing too massive on the Nifty and the Bank Nifty. The mid cap and small cap also looking fairly okay this morning. Small cap still about 0.5% up. Let's pull up the heat map and give you a sense of really what's working. And as expected, Kotak Mahindra Bank at the top of the charts this morning. What a comeback, at least for the stock. Now, whether the comeback remains or not remains to be seen. What's moving that stock this morning is purely the numbers. Kotak Mahindra Bank Q4 numbers were stellar, a beat on all counts. The management seemed very, very confident. Ashok Vaswani chose to have a press conference in person and address all the issues squarely. The street seems to have liked it. Likewise for Britannia. On the face of it, the numbers were poor, but in line with expectations and sort of what you've seen in that entire space, but clearly something that the street has liked on the numbers. So the first two counters definitely are as an impact of numbers more than anything else. Bajaj Finance also doing fairly okay. The other pop is coming from tech to some extent. At TCS, you can see doing okay. HCL Tech also not very bad. But apart from, I would say, the first two counters, you can see not too much of movement. Let me take you through what is on the sell side today. And Titan. The numbers have disappointed, especially for a stock at the valuation it is right now. So Titan about 3.5%. SBI also having a bit of a tough morning right now. But apart from, I would say, the top two losers and top two gainers, a lot of middling over there and not too much of a movement, at least in the first few minutes of trade. Is there more excitement, Agam, when it comes to the broader markets and some big movers over there?
Yeah, there certainly are. And of course, a lot of that will have to do with earnings coming in. So let's take a look at all those counters from the broader markets beyond the Nifty 50, which are in fact reacting to their own set of earnings coming through. And a whole host of them, of course, coming out with some very sharp increases and decreases as well. But I'm going to start off with Avenue Supermarts. A strong quarter, perhaps on expected line. But because of that, we're looking at a 1.5% up move there as well. M&M Financial is absolutely flat at the moment. Inox Wind Energy is looking at an up move around 2.5%. So that's the other interesting counter to watch out for. Among the set of counters which are also looking at some amount of weakness, Tata Technologies is now down 4%. It's at 142 rupees per share. It's just not coming through in terms of its translation for performance. This is despite the fact that the management has in fact said that FY25 will be a strong year for them. Zen Technologies, strong quarter. I reckon this is about a profit taking because there are no complaints with respect to the kind of performance that's come through in Q4. And Birla Corp, again, a very strong set of numbers coming in, which is why you can see a 5% up move there as well. Let's move on beyond earnings. And we have an update from DCM Shriram that's up around 1.6%. And of course, we also have Craftsman Auto, which is also in the news, but not too much to speak for there. Up around 0.5%. All in all, in general, we are looking at more pros and cons and more advances as compared to declines. And I reckon that that's what the markets will take away this morning, at least in the start of trade, Tamanna.
Absolutely. Some others that I'm not sure you talked about REC, but then let's just revisit what's happening with REC this morning. And it's seeing PFC, REC both seeing fair bit of weakness in opening trade. As of course is Paytm, but REC specifically I found interesting because after their massive run-up, they now are facing selling pressure and profit booking completely. A few others, interesting counters to talk about, which have seen good moves on the upside. Rainbow Children is doing well today. So is Godrej Properties. Godrej Properties had a strong set of numbers. That's talk about 4.5%. In fact, there were some brokerage notes which were not that positive on a Godrej property, but you're definitely seeing a good move. Rainbow Children Hospital is one that's doing well. Deepak Nitrite I talked about. But I think a few of the others that are definitely also doing well, and that's catching my eye, is an EIH. Just pull up an EIH. This was huge in pre-market. In pre-open, it had an 18% bump up. We'll have to check if there was a large deal traded over there, but still about 2.5% up right now. Overall, I would say that the banks are doing relatively okay. It's not seeing that kind of a bump up as one had expected looking at the pre-open rates, but the market's doing okay. Realty stocks are having a good day, largely because of Godrej Property, Oberoi Realty as well, fairly fine. But on the downside, you do have some profit booking in a Macrotech and a Sobha. Quick take from Sudeep after the first rates have hit, and any big decision you would take here on an REC. Let me come to you on REC first, Sudeep, because we talked about it briefly in the pre-open session. It's seen a fair bit of run-up, especially after its numbers and profit booking today. Is there an opportunity to accumulate, or would you hold off?
In the morning also we discussed that 530, 535 zones are good zones to accumulate, and I feel from the current levels the risk reward now would be a bit better than it was earlier compared to 555. So I guess on dips this could be a good bet, but from a positional perspective, if someone is expecting overnight gains buying this and just riding the trend, then I feel it would be not justified. But on dips say to 525, 530 zone, 510 could be a decent level as a support, and I feel till 510 holds we could see a steady pullback up to 550, 565, and beyond that then the targets are still bigger, but at least one level at a time. 510 would now act as a key support on the downside.
All right, let's also pull up Anup Engineering. This one is on a tear at a new life high, up around 14% at the moment. Of course, once again, this is one of the other ones which also had come up with strong earnings coming through. It's a relatively smaller company. Of course, it's the market cap around 4,000 crores, but it does seem like it is gaining quite a bit of traction of late. And as you can see on your screen there, in terms of the price action, a substantial up move there. Sudeep, any word on Anup Engineering at the moment? I reckon it'd be too late now, considering going and adding longs at this moment, considering the risk-reward ratio. Or do you think that even at this point in time, there may just be an opportunity to perhaps go long on this one?
Agam, I feel at the current level, the risk-reward ratio is not justified, and even though we have because of good numbers, the stock has moved 14-15%, but at 2050, 2100 levels, I feel the risk reward is not justified, and it's only good for people who are holding it since the lower levels. So for them who are holding it from lower levels, they could keep a trailing stop loss of 1930, 1950 on the downside and continue to ride the rally. But for people who have not, viewers who have not added this stock at lower levels and wish to go long at the current levels, I feel they should avoid, and there would be a lot of other opportunities that they could take in rather than just adding Anup engineering at higher levels.
I'm just going to come back to PFC REC because the losses are deepening there. PFC now about 8% down, REC 6% down. Any sort of opportunity to take a slightly longer term bet here, Devin, on these counters?
Yeah, well, I think the most of them has priced in, at least for the near term, in both these counters. Having said that, the growth opportunity remains, I think, fairly convincing because of, I think, the larger amount of thrust coming on to the power sector, power distribution segment included in it. And both these companies have the corrected balance sheet, if I may put it that way. I think they are relatively much stronger with a smaller amount of NPAs to handle now. So from that perspective, I think these companies are looking reasonably, I think, strong. And because of the Navratna status, I think they also get an advantage of having a lower cost of funds, which is basically helping them, particularly because of the financing activity that they end up doing on the infrastructure side. They end up getting the advantage of the margins also because of that. So all in all, put together, a strong business proposition. The opportunity-wise, I think the stock definitely doing very well. Only thing that in the near term, from the price point of view for the investors, I think things are priced in. So corrective downside could be, I think, a buy opportunity into this complex.
Right. Well, let's pull up Tata Technologies now. Again, very ordinary quarter coming in, but as I was mentioning, that the management is very positive about the outlook, specifically with respect to FY25, with the kind of deal pipeline that they have. They've been Tata Technologies. Well, it was all fireworks when it listed a few weeks ago, but since then, a few months ago, pardon me, since then it has come off. We've seen a lot of correction, and it does seem like it's on a back foot once again. Do you think that this would be an opportunity to perhaps start nibbling into the stock, or would you want to wait for a quarter or two more before you start seeing a change in the performance going in?
Yes, Agam. I think this is an opportunity. Well, the stock obviously traded at a quite firm post-listing, and it never gave an opportunity to buy into. So today, with a little bit of corrected prices, and at the same time, I think slightly somber result, I would think that I think this becomes an opportunity to buy. Because when you look at the business verticals of each of the areas in which the company is operating, I believe that the opportunity size is growing for them. Maybe if one gets to know, I think, higher amount of order inflows which are expected from respective verticals, I would think that this is an opportunity to buy for the long-term investors. If any fall in the price, definitely more than welcome, because the valuation-wise, the stock is at this point of time reasonably priced. I would say slightly expensive also. So any correction in the price would become a better opportunity to buy from the risk mitigation point of view.
Trigger for Tata Technologies last was the tie-up with BMW. Their dependence on their top 2-3 clients remains a concern, and no clarity yet on how much and to what extent that will change. But the space they are in is rock solid. Sudeep, just one quick last call on a Godrej Properties. I thought we must address it because of the kind of up move that's happening this morning. About a profit booking justified there in store, or what would you do?
I feel this stock could still continue trending higher because overall the entire month of March, in the last 2 weeks, we have seen a good decent up move in Godrej Properties. It was a trending up move from 2150, 2200 levels till 2790 odd levels. Post then it just corrected a bit, it consolidated, retesting its 20-day exponential moving average, and once again now it has broken out of its 10-15 day consolidation that it was witnessing in the last 10-15 days. So overall, I feel now post this breakout on the upside, backed with volumes, at least the first 15 minutes show a good bump up of volumes. So from the current levels, I feel the stock could still continue edging higher up to 28.30, 28.50. And for someone who's holding it from low levels, could continue holding it with 26.50 stop loss as a trailing stop loss on the downside.
All right. So that's the take on Godrej Properties. We'll take a very short break. Thank you so much, Sudeep and Deven, for joining us today. Always a pleasure to speak with you. Markets are tempering down after the first sort of initial enthusiasm. Nifty still about 80 points up, above the 22,500 mark. But that resistance definitely coming in. IT stocks doing relatively well today. The Nifty IT close to a percentage point up. But Kotak Mahindra Bank really is the one having a good morning. Let's pull up Kotak Mahindra Bank once again now, about 4.5% up as we speak. So, Ashok Paswani says that we will do everything to come back. Is that going to come back? We're going to have a special conversation on it at 10 o'clock. Don't forget to tune in to that show on NDTV Profit. But for right now, I'm taking a very short break. Stay tuned because we're not done yet with setting you up for the day's trade. Tata Tech CEO Warren Harris will join us on the other side to talk about their numbers and more.
Welcome to NDTV Profit. I am Rucha Somaya and we have with us today Mr. Warren Harris, the CEO and MD of Tata Technologies. Hello, sir, and welcome to the show today.
Hi, thanks for inviting me.
Thank you, sir. So we'll start with the numbers. Largely flat performance, apart from the profits which have come down around 8% quarter on quarter. So how do you look at the performance this quarter?
Sure, we had a very solid Q4. If you double click on the top line, I guided in January that we were going to see a decline at one of our largest customers, VinFast, as a result of us completing the development of 2 electric vehicles. And so we saw a runoff at that account. But if you put that to one side, outside of VinFast, the sequential growth in our services was 10%. And as far as net profit is concerned, we've decided to embrace the new tax regime here in India. And so we had to expense some deferred tax assets, and that's a one-off accounting transaction that will not continue going forward. So the business, in terms of momentum, performed very well. We were pleased for growth outside of VinFast. We've maintained our margins, and we're taking a significant amount of momentum into the new fiscal year.
Sure, sir. So you mentioned revenue from VinFast, right? So I believe that VinFast has started a new plant, a new manufacturing plant in January, this EV manufacturer. So what do you think around that front? Any revenue that can be added from this client?
Well, like most new energy vehicle companies, they develop product and then they focus upon building the product and generating demand from customers. We've been part of enabling VinFast to develop a portfolio of 4 electric SUVs that VinFast are now looking to build in different parts of the world. and to sell to consumers. I think as they build success around that portfolio, then they'll start to look at investments in new product. And given the success of the relationship that we've had, we would fully expect to be part of that.
Sure. So around the client concentration, I see that the 50 million plus clients have been consistent around the last 3 quarters. So from the addition of this VinFast client, how do you see the revenue concentration moving in the next coming quarters? Do you see any dilution in the top clients, or how can be the trajectory going forward?
Well, if you look at our customer pyramid over the last 12 months, it's significantly improved. We're seeing diversification of our revenues, both inside of the group and also outside of the group. We're also seeing significant uptick in our relationships with customers like Airbus. I think I've signaled before that we were impaneled a couple of years ago at Airbus. We've gone through the build out of our footprint in Toulouse and Hamburg. We've gone through various accreditations, and we've begun now to discharge an order book at Airbus that has been built up and achieved a figure that certainly gives us encouragement in terms of our expectations for growth at Airbus and within our aerospace sector in the next couple of 3 years. So we're very pleased about the strategic improvement that we've seen in our customer pyramid, and we certainly expect that to continue.
On account of the aerospace business, as you rightly mentioned, that you had indicated some kind of revenue from this space when the IPO was coming up. So can one expect any sort of revenue, and around what percentage of revenue can come from the aerospace business? Number one. And number two, are you seeing any kind of deal wins or conversations with Air India in this space?
Well, Air India has been a customer of ours since the group acquired the asset, and we've worked with Campbell and his team very closely in terms of refurbishing the existing fleet. We also expect to be very much involved in the investments that are going to be made in an MRO facility here in India. So that relationship is one we're excited about. But we're also excited about the investments that the group is making in aerospace. TASL has announced a program with Airbus in and around C295. There was a helicopter deal that was announced last year. So the influence of the group across various companies is increasing in the aerospace sector. And I've shared before that traditionally we've been about 90% automotive in terms of our revenue mix. We expect in the next 3 to 5 years to transition aerospace and what we refer to as industrial heavy machinery to about 20% of our business mix.
So around 20% of your business might come from aerospace. Is that what you mentioned, right?
Well, 20% from non-automotive customers. And aerospace will probably be the most significant sector that will contribute to that.
Sure. Got that. And another question around the BMW JV that you recently had. When can you expect the revenue flow from this kind of deal within the next how many years, and what can one expect from this joint venture?
Well, there's a couple of things that I think that one has to think about with BMW. One is the JV itself, and we're currently going through regulatory approval in Europe and China, and we expect that to be completed sometime in the July-August timeframe. The JV will be set up and begin operating in the September-October timeframe, and so there's business that will scale from there. But one of the things that we are starting to see is that BMW is one of the benchmark automotive OEMs in the premium segment, and it's a company that the rest of the market looks to. And so we've started to see the halo effect of BMW endorsing Tata Technologies in terms of the partnership that we are building. BMW went through an exhaustive search of engineering service partners or potential partners here in India over more than a 12-month period. And some of those partners had incumbent relationships with BMW. And yet after they evaluated the candidates, they selected Tata Technologies, which I think is a testament to the growing capabilities that we have, particularly in automotive software.
Sure, got that, understood. Another question around services revenue. This segment has been down around 9% year on year on constant currency terms. So do you think the EV slowdown in the US or Europe is affecting the sales over here?
Our business grew 30% outside of VinFast. It grew 10% sequentially. So 30% year on year, 10% sequentially. And when you look at the overall business, even if you include VinFast, we grew 15.9% in Indian rupee terms. And so we have built up a head of steam. We're not seeing any decline in demand. And we're investing very heavily in the capability to satisfy what we expect to be a very healthy market, certainly over the next 3 to 5 years. So, we're not seeing any tapering of demand, except for the transition that we fully expected to undertake at that one customer, VinFast.
Okay, well, that's the management of Tata Technologies telling us about all that we can expect going forward. Well, of course, the stock is under pressure at the moment. Want to very quickly take a look at how markets are faring. And the Nifty is still marginally in the green right now. It's holding on to the mark of 22,500. And besides that, in terms of key sectoral movers, let's pull up the banking index as well, because I reckon that Kotak Mahindra Bank will certainly have a positive bearing on the index. So the banking index is also up around 0.2%. And well, let's also pull up Titan and see how things are faring there. Titan is under pressure this morning, and that is largely because of the possibility of the bottom line as well as its operational numbers missing out on street expectations. Well, we spoke to the management of Titan about the quarter gone by as well as what we can expect going forward. This is what they had to say. Listen in.
The quarter 4 and full year has been a satisfying performance for us. And on the growth front, we did pretty well in spite of several challenges during the entire year, and particularly in quarter 4, gold price volatility created for us. But overall, satisfying quarter. Of course, the margin was a bit slower. But if you look at actually FY23, we always have been talking about we had some one-time gain. And for that, if you adjust about 30-40 basis point lower than the normal margin trajectory, and we have talked about competitive pressure and gold price volatility caused this, because we have been prioritizing growth and customer acquisition and market share.
Understood, sir. And I think I just want to take the point forward that you said on gold price volatility. How has that affected your inventory currently? And was that one of the key reasons for the margin pressure in the jewelry business as well?
So when the gold prices are volatile and particularly a sudden spike or increase happens, of course, consumer sentiment weakens a bit, and people who can defer, who can wait for their purchase, they tend to do that. And once the prices settle down and people get used to new price levels, they come back. So quarter 4 had that phenomena happening. But eventually, it comes back, like it also kind of put the confidence back in a gold as a class of a store of value, where generally prices have been going up on the long term. And that brings back the store of value investment angle to the gold jewelry purchases as well. But yes, in the quarter, to kind of attract customers, many consumer offers and gold exchange program, etc., were promoted, and that has affected margin a bit.
And what is your general outlook for these gold prices? Because currently we haven't seen in the month of April as well, post quarter 4 as well, the prices haven't come down, and in fact they've also flattened and are expected to somehow go up as well. I know you can't speak on numbers per se, but how do you see the trend for gold prices going forward right now?
Very difficult to predict, and gold price gets governed by so many global factors, and one of the factors which affect gold also is the geopolitical issues, which are very, very unpredictable. Also, we believe central governments are also increasing their purchases as far as gold reserves are concerned. So gold is going to be a very stable and strong asset class. Some corrections may happen because all of a sudden increase has gone up, but very, very difficult to predict.
Understood, sir. And I just want to talk a little bit about margins. You said that, in the conference call that roughly 12 to 13% margins should be maintained by the company over the next 12 to 18 months. Now, despite being a very, I wouldn't call it a shaky start to the year, but on basis of the gold price, which is a key raw material, being up, while there has also been a very increased competitive intensity for the first time in the last few years, how do you speak on margins, and if there's anything you want to add on competition as well, sir?
So, of course, the competitive intensity has gone up. The existing players are expanding pretty aggressively. Many new players are coming into the industry and sector. So retail capacity has gone up. I don't think demand has kept pace with that capacity addition. So competitive intensity is going to stay. And I think our margin for jewelry business, operating profit margin, will be more centered towards 12 than 13. That's the thing. But as always in the past also, we have said that while growth is a priority, but it is not at the cost of margin. We do take tactical calls to respond to competition. But it appears to me center of gravity for margin in jewelry business would be around 12%.
All right, so that is Titan talking about their numbers and how they won't compromise with margin. The stock, however, taking quite a beating after the numbers today, down about 4.5%, nearly 5%. We're taking a short break, but on the other side, we're talking to Zen Technologies. A good set of numbers on the face of it, but perhaps a tad below expectations because you're seeing Zen facing quite a bit of pressure in trade today as well. We'll try and understand the outlook with Ashok Atluri, the CMD, after this short break. Stay tuned. Welcome back. You're watching India Market Open. Let's talk about Zen Technologies. Their numbers are out and a healthy set of numbers, 47% up on revenues, EBIT margins, a little lower than last time, but their order book has gone up and overall it has been a healthy set of numbers. The stock is down today, perhaps in part because expectations were higher in terms of the revenue and profit numbers. Ashok Atluri, CMD of Zen Technologies, is joining us now, not to just talk about the financials, of course we'll get into that, but also on the road ahead. Mr. Atluri, very good morning. Tamanna here, with me is Agam, and great as always to speak with you on NDTV Profit. Let's begin with this quarter and actually this financial year. A very strong order book. Solid order book actually at the end of FY24 with a 1,402 crore number. What is the outlook on the order book? Let me start with that. And if you can just give us your take on why we've seen margins compressed. Is it all due to raw material costs going up?
Yes, so order book is at 1,400 crores, and out of that we have the equipment orders about 1140 crores, and again, even the next year is going to be pretty good. We are expecting to execute more than 900 crores of orders this time. The margins, we have been saying always, that the EBITDA margins will be around 35%, and the net profit margin will be around, profit after tax margin will be around 25%. So we have exceeded that. Perhaps the market had higher expectations, so I'm not very sure about that. But yeah, but this is what our guidance has been, and we have done a little better than that.
So yeah, it is down to market expectations, I assume, and the reason is because of the rate at which your order book has gone up, Mr. Atluri. And perhaps that is why. The concern is that you're going to have a lot of your cash flow also tied up in your inventory and your raw materials. Do you see that easing and margins going up at some point, or is this the range which is sustainable, the 35 to 36%?
Yeah, so that's the easily sustainable range. So we think it'll go on. And actually, in terms of work, we don't have any stress in terms of cash or working capital as such, because we get advances from the government and we execute. And once we execute, we do get the payments on time. So there's no financial liquidity stress as such at this point in time. The only thing is, we had predicted, we had told the shareholders that, we expect a turnover of 450 crores at least. And we had at 430 crores. So that was a little underperformance of about 4 to 5%. So there is some disappointment there. But in terms of profit, I think we have delivered what we have promised.
And you see turnover now. What are your projections for turnover going forward?
So we have given 900 crore plus projection for the next year.
Wow.
And yeah. I mean, we have the order book of 1140 crores, and we will be executing 900 crores out of that. So
correct.
That's been
so it's in the bag in that sense, yes.
Sure. So you just mentioned order book of around 1140 odd crores, and about out of which you will execute 900 crores this financial year. Can you tell us about your expectation in terms of incremental orders coming through as far as this upcoming financial year is concerned? Some sort of a number that you're targeting, you're working with?
So equipment orders, while we execute 900 plus, we expect the order book to go equipment from 1100 to about 1500 crores. That's our expectation.
All right. And also, if you could tell us about whether or not you are planning some sort of acquisitions, inorganic growth that can be expected going into this year.
So we are looking at targets to acquire. Again, our checklist is a little stronger checklist in the sense that we want R&D to be, it has to be a R&D IP-owned company, not just a manufacturing outfit. And they should have deep patents in that. So we have a very stringent checklist. So if something passes the checklist and helps us expand into our adjacencies, then we'll definitely look at those companies. So, if we have a enabling resolution passed by our shareholders. So we should be, if we get an opportunity, we will definitely acquire such a kind of a company.
Is there anything that you've shortlisted in terms of inorganic growth? You're saying you're saying it has to pass your checklist, but is there anything on that list first?
No, so yeah, I mean, we are looking at 5-6 companies. Obviously at this point we cannot name them, but they're both Indian and foreign companies. So we're looking at them. If the moment something is finalized, we'll definitely let you know.
Of course. You also have passed a board resolution to raise 1,000 crore rupees. Give us a few more details on this, Mr. Atluri. By when, by what mechanism, what time frame, and for what?
So this is again it's for a QIP, and we will, once we are in fact in discussions with internally with the board and some stakeholders on when should be the time for the raise of the money. But I think we will be communicating it in a couple of months about that, if not earlier.
All right. Mr. Atluri, if you could also tell us about your exports, about markets abroad that you are developing at the moment. I believe you are eyeing Middle East, Africa, and these regions where you look to increase your exports going. Can you tell us a little bit more about this?
So, we did about 20% of our revenue was from exports. We expect that revenue to go up to about 30% next year. And we are focusing on, Middle East, South African countries and the CIS because they have the Russian equipment there. So other than this, we expect that there will be a tremendous opportunity even in Europe and America. And, in the Middle East, especially Saudi is one country that we are looking at. So we expect there will be exponential opportunities in the new markets too, in addition to the existing markets. And and the growth will be very significant from export.
Right. Mr. Atluri, can you also tell us about the anti-drone market, how big it is, and what are the opportunities for the company here?
So, we are, in the current year, we did about 25% anti-drone systems and 75% were simulators. We expect this to go in favor of anti-drone systems. An anti-drone system is the latest requirement domestically and internationally because it's now becoming a drone warfare. The warfare, there's nothing called warfare now. It's all drone warfare, and everybody wants protection against drones. So anti-drone is a thing, product that we have. There are the open tenders by the armed forces, and we were the only person who qualified for Air Force or the Army. So it was a resultant single vendor situation. Nobody has the IP. It was under some category called indigenously designed, developed, and manufactured. So only we got qualified in that, and we expect that this opportunity will explode both domestically and internationally, and we will be a big beneficiary of this. And the market size, it's around 10,000 crores is what our estimate is, but it will be a little higher than that.
Okay. Just, Mr. Atluri, wanted to know your outlook for your order book. You have already 1,400 crores in the bag. You'll execute about 900 crores next year. But going forward, do you expect this order book to augment at the same rate? I'm trying to understand, since a lot of these orders get front-loaded and then executed over time. So what is this looking like another year out?
So, we are predicting that we will do about 1,350 crores. We'll have a growth rate of another 50% the year after, so in the next year. So, and we expect the equipment order book position to be around 1,500 crores, and maybe if you add up the AMC, maybe about 1,800 crores or so.
All right, Mr. Atluri, a final question from my end. Your R&D spends have increased within the range of around 28 to 30%. Are we expecting this to continue? Of course, by that I mean with respect to your revenues. Are we expecting this to continue going forward?
Yeah, we do expect earlier we were spending around 15 crores per quarter, maybe about 15 crores in a year. But now we expect that to definitely go up significantly. Yeah.
Thank you so much, Mr. Atluri. The CMD of Zen Technology is talking about their outlook. They expect another 50% growth in the order book next year. That's an upside. But right now, the turnover was slightly below market estimates. And you've seen quite a cut on Zen Technologies today. The other place which is really hurting, I want to pull up PFC, REC, the PSU banks. That entire pack is getting a hammering this morning. And one of the reasons is a proposed guideline by the RBI that suggests 5% of standard provisions to be set aside for under construction project finance advances. So that's going to be a bit of a pain for lenders. So it's a sharp increase from the current standard provisioning requirement of 0.4%. You're going from 0.4% to 5%. Let's pull up the PSU Bank index, please, not just Bank Nifty, and see what's happening there. Its components as well, which are hurting. REC, PFC, those are the other ones. So the Nifty PSU Bank is down 3.5%. We'll pull up the components as well, please. Now, the provisioning requirement will only gradually reduce to 2.5% and then 1%. So you're at 0.4%. RBI is saying let's go at 5% and then gradually reduce. Will increase provisioning requirements significantly. That's Bernstein's take, that this is what the impact will be. And reduce profitability, listen to this, by as much as 50%, 50. Organic equity accrual will be severely impaired. That's why you're seeing, that sort of red over there, Canara Bank hurting the most. I just want to pull up PFC REC once more, and that sort of explains what's happening there. This is not just profit booking for a stock that has run up. This is a clear concern about these new rules. Now, remember that these are guidelines right now. REC down 9%, PFC down 10% as we speak. These are guidelines right now. What is going to be the full extent of it is something that we need to sort of understand going further and, get a sense of how it will work out individually for each counter. But nevertheless, on an otherwise okay day, this is what is causing quite a bit of pain to the banks. We'll take a very short break, but stay tuned. On the other side, we have special coverage on Kotak Mahindra Bank and a lot more.